Hi, this is Ron Janish, and this video is going to give you a deeper and richer understanding and somewhat of a demonstration of what the older and the newer versions of Precision Trader are really all about. And it's also going to let you know how you can get a totally free, no strings attached copy of Precision Trader. All right? First of all, what does Precision Trader do? Well, it does a number of things. The version 3.0, for example, would do things like chart certain lines, and it would enable the individual to draw charts like many other programs do, and it would also do this automatically by flipping a certain number of settings. Right? Very easy, very straightforward. And what good is having the charts? Well, if you're using what's called a leading indicator, the leading indicator will help you understand approximately where prices are going to turn, reverse, things like that. I'll give you an example. This is a chart here that we posted back around the 8th or 9th of August, as you can see. And on here we drew a line that we'll tell you a little bit more about in this video called the ORE line. So let's take a look and see what happened, because the ORE line is known for is a line that's known for helping us to find turning points. Okay, well, apparently this line came in right around here. This was the 8th or 9th of August, and so the ORE came in about here. Actually, let's see what the exact value was in that. That was about 1100. So let's bring up the ES chart. That was ES pound F. Okay, there we go. Okay, ES pound F, and this is about 1100. So right around in this area here is where the ORE indicator said came in, and because of the line that's drawn there, that would imply that there's a leading indicator that would tell you in advance where prices would turn. That's what a leading indicator is, and that's the purpose of a leading indicator. On the other hand, you have something called lagging indicators that we also have. And one of the lagging indicators that we use is what's called the pitchfork. And when you draw the pitchfork, what all you're really doing is getting a pretty good idea as to within what parameters prices will stay most of the time. Kind of like a channel, but it's kind of automatic, and you don't have to optimize it. It's the market optimizes it for you. It's really cool. So this is what a lagging and leading indicator is. Let me show you another example of a lagging indicator that's very popular. One of the very popular lagging and leading indicators is, or a lagging indicator is something called uh, the Golden Cross over at Goldman Sachs. That's what they call it, and it's simply when the 300-day moving average and the 50-day moving average cross. That's called the Golden Cross. And because if that's used effectively, then that's very helpful in knowing where prices will go. Now this is September, okay? September 2011, as you can see. So let's take a look and see what prices did. Okay, after September, I guess it's September 19th. Okay, let's see. Whoops. Let's see, what was the name of that chart? It was SPXU. Okay, let's see what prices did. There we go. There's about September 11th. And then, as you can see, well, all that prices did is they went the other way after prices reversed at the Golden Cross, as seen on the other chart. Okay, and that was the idea of what was supposed to happen. All right, so because prices were above it and things. And let's see, what else? Why else would that be? Well, because let's take a look. There we go. The idea also is when prices are above it, then things kind of go that way. Okay, so that's how the Golden Cross kind of works. And one of the things that you'll find that we do is we post charts with these A's and double A's and triple A's on them, and they'll really start to make sense for you. For example, this is a Vista Gold chart we published on whatever day this was. This is the last bar, and our computer program put out a whole bunch of numbers, and then it converts these numbers into letters, and the letters were 3A's. Now 3A's is reasonably nicely bullish, so let's take a look and see what happens. And this, by the way, is the most recent version of Precision Trader, not version 3.0. And so so let's take a look at what happens is you get these 3A's, and let's see what coincidentally happened with VGZ. Oh, how lovely. Okay, so what happened was, where was it? What was the price? What was that chart again? Okay, that was, oh, that was in July. Okay, and this is a weekly chart. Let's see if we can do the same thing. A weekly chart. Okay, in July. Okay, so that would have been here, or somewhere around here. Okay, well, anyway, I'm kind of confused. Let me see what exact value that was at. That was at a value of a little over 250. Aha. So let's see where that was. That probably would have been, there's a value a little over 250. That's actually in June on a weekly chart. Okay, close enough. And so this is what happened afterwards. Okay, so 3A's in this particular case resulted in this thing here happening. Here was 250 and there is 459. That's quite a difference in price. All right, so anyway, what it does is the newer version gets these numbers, and I'll show you that in a minute, and then goes into these letters and puts these letters up, and the reason it does that is to help us understand what's going on in the market. So so for example, because what it used to do is it used to just publish this thing here where it said ARTI, which is means nothing more than Andrews reversal of trend indicator, and the AAA has a lot more to it because it takes into account a lot more lagging and leading indicators, and kind of calculates it all up. So let's see what happened in June before we upgraded to the alphabet soup stuff. We just had Andrews reversal of trend indicator. Let's see, June 6th. Let's see. Oops. EUO. Let's have a daily chart, and let's take a look at June 6th. Okay, well, this was June 6th, and this was the day after. And okay, so prices made a low here. Andrews reversal of trend indicator. Okay, so I guess the trend did reverse and go up from there. Okay, so this gives a pretty good idea of what the version, that's the most recent version, does. Okay, and so of that software. And let's see. Oh, okay, so let's say this, knowing this much information, had a target of here. Okay, and so this was, prices were at 130 in June, and let's see what target was hit, which was probably a little bit later maybe in July, later in June. Okay, that would be SPY. Okay, so this was in June. Let's see, where are, whoops. In June, no, that's not right. Here's June. Okay, so let's see what this is, about 130. Okay, and then what was the target? Let's take a look at this again. Okay, so the target was at about 127 and prices were about 130 in June. Let's see what actually happened. Where is that again? Godly. Okay, so here we are, and the price is about 130, and here was the target area somewhere down here, and then prices went down to the target, went up and went down again, and then went up. Okay, so I guess prices did hit the target area. Now let's see what else. Oh, okay, this is SB3 target hit, and that usually means that there's SB3 is a certain type of signal that shows there's a reversal of some type. That looks like it happened around the June 6th or 7th, and at a value of about 128.86. Okay, and oh, SB3 is an interesting indicator because what it does is it typically shows you a trend reversal within it uses intraday charts and shows you that within 75 minutes of the trend reversing, which is kind of neat. So this was at 129 roughly, and roughly on June 6th. Let's see what happened again. Okay, 129. Where's June 6th? Oh, there we go. Well, looks like it just showed a trend reversal for a short period of time, and the actual overall trend reversal didn't happen until down here. Huh. Okay, so it wasn't super, and then even if it pointed this one here, wasn't super accurate. This one here was much better, and that's one of the reasons why we came up with this other mechanisms of the double A's and triple A's and stuff like that, because as a result of that, we have multiple indicators that are lagging and leading that are very reliable, and when they come in the proper numbers and a few other things, then the probability is really good that the market's going to go the other way. Okay, so that's because they're just not perfect, you know, and that's from our most recent software. Okay, okay, let's see, and these are all nice and whatever. Okay, here's another Andrews trend reversal indicator. Let's see what actually happened. This was beginning of June at a price of about 34 in TM, at a price around 36, 35, 36 in TMV. Let's see what actually happened. Huh. Price of around 36. Okay. So, yeah, prices did reverse. You had a trend reversal indicator of some kind, as I think that's what it said. And prices did reverse in trend for a while. And after that reversal in trend was over, down she went some more. And that's why this new sophisticated system, this thing with all this alphabet soup stuff, is in the program, because one of the issues that we had was that, yeah, our technology would find these wonderful little turning points, but they didn't last for a long time. And while that's okay, we really like to have a pretty good indication ahead of time that these turning points are not going to last for a very long time. Okay, that would be something that would be useful to us in managing money, and for hedge funds and stuff. So this is what's going on, and let's see. So we have that going on, and where am I? Where am I? Okay. Yep. So, okay. So he's asked me to upload something onto iReport, and I'm trying to do that. I don't know if I can do that, because I don't have his password. Oh well. Anyway, this is the chart posts, and that should give you some understanding. Now, you wanted to know how you can get the most recent copy for free, absolutely no strings attached. And when I say no strings attached, what I mean is simply this: that we will give you the program, we will give you a fully functioning, working program, no strings attached. You can have it, no problem, as long as you're a member of the course, that you've taken the Andrews course, the Advanced Andrews course. No strings attached, you can have it. And that means that you get 100% support, just like everybody does. You get a program that works in a variety of time frames and in a variety of formats in terms of data that it reads. And it's free. What could be better than that? Well, I'll tell you what could be better than that. What could be better and is better than that is some of the other products, and that is the most recent version. And with the most recent version, you'll be able to utilize the ORE indicator and many other really cool things. Uh, well, what the program does is it does the analysis and all those kind of things, like put up those A's and things and stuff like that. And then it ships that information to a module called ATM. And what ATM does is really cool. What ATM does is it has a process which decides how many positions to put on for what account, how much to risk, and just a whole bunch of other things that are just kind of complicated to think about for the average bear every time. So what happens is the computer does this really well automatically, and uh, and this works really well in conjunction with those all those those alphabet soup things, those triple A's and things like that, and OREs and all that kind of thing. And so this is really useful. And this is what we use for companies that are hedge funds that would like us to help them out a little bit and help them to have signals that are pretty decent to know when to buy and when to sell. And then we naturally, the ATM portion of the program takes it to the next step. And after understanding what the goals are for that particular account and the size of the account and what it's going to be trading and all these other intricate things, is it automatically makes the decision as to whether to buy a little bit of gold, a lot of gold, a little bit of silver, a little bit of bonds, whatever's appropriate. Okay, and also where to put the stops and those kind of things. ATM, by the way, stands for, I believe, Automated Trade Management. So this is what's going on, and if you're interested in this latest version, sorry, that's not for sale. We use that in-house, and we have it here. If you come by, you're welcome to see it a little bit. And if you want the 3.0 version, if you at any time took the Andrews course, the Advanced Andrews course, we'll give it to you, no strings attached. So you get a fully functioning version. It does all the stuff that the version that I have in 3.0 does, and it just works wonderfully. Anyway, that's the scoop. Thank you for your time, and take a look on the web. There's if you go on, if you Google or search for Andrews Seminar Live, quotation marks, right? On YouTube, for example, you'll be able to see my good old friend Dr. Alan Andrews and I at a seminar, and you'll be able to see Dr. Andrews teaching some of the methods at a seminar. And of course, it's all free at no additional charge, no strings attached. So go for it. Thanks. Bye.